Hello and welcome everyone to today's session. My name is Mohammed Shanti and I will be your host in this US Market Open. Just before we start, I'd like to give you that every single information that we provide here is for educational purposes. Please use your own research and your own analysis to make your investment decision. We would like to recommend you to use your thoughts and your minds before making any decision. Please always use your take profit and stop loss levels. Risk management tools is required before making any decision. So let's talk about what happened in this market today. So the dollar edged. So 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 today the dollar edged higher, and as you know, the bond yield has spiked up. So also we have the yen actually sank. Stocks are under pressure. So the bonds sell-off gathers steam ahead of the large treasury auction, pushing yields higher. Now, this has been actually seen on the US dollar and every single item against it. Starting with the precious metal over here, you can see the precious metal is trading within the ranges of 1850, between the range of 1876 and on the other side 1834, 1832. So this is a narrow range. This is because of the latest movement from the US dollar. We saw yesterday the US dollar was moving in a bearish movement. Today it's in a bullish movement. So all this is actually affecting the precious metal. From a technical perspective, you can see that the MACD and the RSI are pointing to the downside a little bit, while the prices are trading within a narrow range here, just a little bit below the moving averages, or we can say the moving averages is literally standing still between the prices over here. So a defeat of the either two levels over here from the top side, which is the resistance of 1867, is required to see further continuation to the upside. A failure to defeat that level, we could see some bearish movement towards the 1832, and then again, if this level got defeated, we might see a bearish movement to the downside. I'm a little bit more tipped to the downside, as you know, the dollar is in a very strong momentum. However, the latest pose to the dollar rally kind of made the traders go for scalper trading, basically trying to get $3 to $5 and then get out, and a lot of traders have been playing the range game over here. So in the 4-hour charts, I would recommend any trader that to wait for a test of this level from the top side or a test from the downside, so before making any long-term decision. So if prices literally defeated the 1867, we could see prices continue to the upside towards the 1900. And if we saw prices go below the 1832, we could see prices all the way to the levels of 1785. So this is really important to sort it out. For other markets such as the oil market, you know, the latest news from the Saudi Aramco to push prices on their clients, Chinese clients, and so on, has actually affected the markets lately. Also, the decision from OPEC plus production nations to cover the production from Russia after the embargo happening from Europe. So basically, they are increasing the supply side, which kind of should affect the oil to the negative side. But what's happening is that oil prices are tending to go higher and higher. We're seeing, from a technical perspective, a higher highs and higher lows, which is a bullish setup over here. So from a technical indicators point of view, prices must go all the way above the 119.26 and then next to the 120. At defeat of that level, we could see prices all the way to the 125 and then next to the 130. Now, when does the bullish trend finishes, or when it does stop, prices must go below the 110 in particular. So this is the main support levels for traders. At defeat of this level, we could see an end to this bullish rally, and maybe we could see prices continue within a range after that. However, the technical indicators are pointing to the upside, so therefore more probability for higher highs and higher lows in the coming future, unless there are some favored fundamentals to the bears. Therefore, in the coming short-term view, prices must remain stable above the 116 to say that the current uptrend is in the favored side. A defeat of the levels of 113, maybe we could see a test then to the 110, and then from that area we could tell if the bullish trend has finished or not. Another market that we should focus on is the euro dollar. As I told you before, yesterday's movement from the US dollar and also the latest decision to actually from a fundamental point of view, which is the investors are a little bit scared that maybe the Fed could stop its current tightening monetary policy. Maybe they could slow down. There was some fear regarding that because originally the Fed decided to push interest rates higher and higher, and that's what made the US dollar favored. This is one of the reasons why the treasury yields are going higher. However, the latest fears regarding that there could be a contraction in the US economy actually affecting the sentiment, and this is one of the reasons why we're seeing some bullish momentum on the euro dollar or even in the pound dollar. However, if you can see today, prices kind of stabilized between the ranges of, similar to gold, between the levels of 1.0640 and 1.08. So a defeat of either of these range or these two levels is required to see further momentum to either to the top side or the downside. So defeating the levels of 106.40 is very required for traders to see further bearish momentum to the downside. So at the moment, we should wait for prices to defeat this level first. Now, if we saw this level got defeated, the MACD and the RSI should give us more confirmation. At the moment, the MACD is having a bearish crossover to the downside, but still not above the negative, still not near the negative territory. We should wait for the MACD to go all the way down to the levels of negative 0.03, and then next a more bearish crossover to the downside, which could give us a confirmation how prices could actually perform. So the next level to watch for is 1.0455 in the long run. A defeat of the 1.0642 could lead the path all the way to the 1.0455. From the top side, a defeat of the 07, the next level to watch for is this, which is the 1.09. This is the long-term view. Now, in the short-term view, now, what's happening is that prices are currently standing below moving averages, which confirms the current bearish setup. Now, what we need to see is this level, as I mentioned, a defeat of this level is quite crucial for traders. So therefore, 1.0624 is one of the major support levels for the bears to defeat, and it could actually trigger some buying could actually trigger some buying points for the bulls, depending if prices didn't defeat this. So we could see prices reach this area, maybe a small wick to the downside, and then a retracement. So this small retracement that could happen, maybe we could see prices all the way back to the moving average. However, if we saw a really strong candle defeating this level, expect more bearish side happening. So it really depends when prices reach this area. So please be careful whenever prices reach this area before making any investment decision. However, if prices didn't reach this the levels of 1.04 and prices returned all the way back to the 1.07, what should you do? Wait for prices to close above the moving average, the 50 moving average, simple moving average. And if it got defeated, we should wait for prices to go all the way to the recent highs of 1.0750. That's their short-term view for the bullish traders. Now, another market that we are looking at is the indices in general. The current trend currently is that there is a range trading happening. This is because, as I mentioned, so a surprise big rate hike by the RBA, and also expectation from the ECB also for pushing rate hikes also, and other central banks has kind of pushed sentiment for other traders to go to other markets. So such as if you look at the DAX, you could see there is a bullish momentum compared to the US 30. That means some traders are actually getting out of the US markets. This is one of the reasons we're seeing some range trading on the Dow Jones. So if you look at the European indices, it's going a little bit higher. However, the US stocks futures turned negative. So if you look at the S&P 500, it's kind of closed just almost 1%, sorry, 0.5%, which is quite big. This is because of the current inflation expectations. And however, if inflation numbers, let's say, didn't go lower after their latest rate hikes, this could actually affect stocks to the downside even further. That's why there are some pricing of the current growth stocks or even technological stocks to go lower and lower. So also, one of the things that actually affected the indices lately, it is the Amazon split that happened. Prices went all the way from 2,400 and 100 to 124. This is a huge price gap. So therefore, this actually affected how the index being measured. The current trend is literally between the levels of 33,305, and from the downside we have also 32,600. Now a lot of traders are playing the range game also, so we could expect some bullish movement over here and aiming to the levels of 33,305. I would expect prices to continue to trade within this range until the next Fed rate decision, because it would give more insight and more information about what's going to happen in that market. Lastly, we will talk about the yen pair. So the yen pair has been seeing a huge movement to the downside, and as you can see, the USD JPY is literally creating higher highs and so on. It's continuing its bullish setup since March 2022, and there is no movement. There's no stop for the USD pair to go higher. So what should we do? Wait for the depths. Enter the market in depths. Never enter on the market at the end at the highest high. Just wait for a dip to happen. So what do we look for? We are looking for the, let's say the current price is 132.60. Wait for a dip at least to the 131.90, and then next to the 131.26. Use this small dip that could happen for an entry. Now, where's my stop loss? My stop loss should always be below the moving average and below a really important level of resistance or support. So 129.96 is my main stop loss area. So I would definitely enter a trade from this area. But what is my main goal? Always use the latest highs as your main target, your first target, and then aim for at least 50% more of that level. So the difference here is almost 160 pips. So I would aim 160 pips, and then next I would aim for another 160. So that's a 300 pips in the coming 2 weeks. So if prices retraced back and continued below the moving average over here, that's your exit point, and therefore we could see a new bearish downtrend. However, the RSI is currently stating that we are on overbought territory. This is a very negative point on the USD JPY pair. However, you never could tell how far the USD JPY could stay within the overbought territory. This is why we could see the RSI continue within the overbought in the coming 2 or 3 daily candles. So as for the MACD, you can tell the MACD is literally giving us continuation to the upside. You can see there is a crossover over here, and it's currently continuing. So we need to see a bearish crossover to the downside, which confirms the dip, and then another bullish crossover to the top side to enter the market again. So wait for that phenomenon to happen before making any trade. Now for bears, maybe some traders love to play the reverse game. So if someone wants to trade in a very short term, try to aim for the levels first, for the first moving average as your entry point. So if prices closed below the 132.38, try to enter a small trade to the downside and aim for this level, which is the 131.64. That's the reverse game if anyone believes in the RSI as their main confirmation indicator. Now, thank you so much for joining us in this session, and tune in for more videos next week. Thank you so much.